Cool. Bet. All right. So the most fundamental aspect of trading for the strategy that we trade is understanding structure. Um, Now, structure is the overall trend in which the market is moving. Now, the market only really move two ways, or it can consolidate, meaning it has no clear direction. Um, and the two ways that it can either go is up or down, bullish, bearish, uptrend, downtrend, right? Bullish is your uptrend, bearish is your downtrend, right? Now, these trends are identified by these highs and by these lows, right? So this peak, these peaks up here, and these lows down here. How you know that you're in an uptrend is that these highs are getting higher and these lows are getting higher. And you literally just call it out for what it is. This is a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, right? We know that if this chart keeps continuing to make higher highs and higher lows, it could infinitely move in that direction, unless there is something that causes the trend to change. Now, Aaron, why would the chart change? Right? The chart would change if the trend started moving in the opposite direction. Now, before I describe a break of structure, this downtrend is literally just the opposite of the uptrend. So these highs are getting lower and these lows are getting lower. So you would name it as such. You would say lower high, lower low, lower high, lower low, lower high, lower low, right? For this, we would be in a downtrend or we would be bearish, right? So we got bullish up, bearish down. Now, if we were in an uptrend, the chart would change because we made a lower low. Now, this gives the chart the permission to now go the opposite way. So these right here is what we call a break of structure, right? When you have a definitive low, or if this pushed up a definitive high, this would change structure, right? Because this low is lower than this low, right? This high will be higher than this high. So we will literally be in an uptrend, switch, downtrend, switch, uptrend, right? For uptrend, you are justified by making higher highs. So if you had a situation like this and the lows maintain, it may have not necessarily been higher than this high or higher than this low. That's okay. You would clearly know if you're making higher highs. And it's the opposite if you're on a downtrend. The highs in this situation, it doesn't matter. It's these lows that have to constantly break to the downside to progressively go lower. That's how you would justify a downtrend. Is what we call pullbacks. This can pull back all the way up here. This can pull back all the way down here. These lower highs do not justify the trend. It's the lower lows. Same thing for your bullish trend, right? These lows don't have to pull back all the way, but you're justified by your higher highs. So that's just basic rundown of structure and just understanding that concept that you are going to have either a bullish trend, a bearish trend, and when the trend switches, it's due to a break of structure. Now, another key thing about structure is understanding what makes this a valid high. Like if the chart just pushes up, is that a high? So in order to define this or justify a higher high, you need two or more candles in that direction to justify a higher high. Now, let's get into colors, right? So you have green and red candles, right? Your green is up, right? These are bullish candles. Your red are bearish candles. Now, if you are new, um, life kind of teaches you that green is good, red is bad. That's not the case when it comes to trading. Everything is money. You're either going to buy or sell, right? You can make money off of buying, and the chart goes in the direction that you want it to go to, which is up. And if you're selling and the chart goes in the direction that you want to go to, which is down, you make money. It's not one of the it's not one over the other. It's not preference. You prefer buys, you prefer sell. No, you're just analyzing the chart, and the chart will tell you, should I be getting into the buys or should I be getting into the sales? Um, and so fundamentally, that is something that uh, is different about trading. Doesn't matter. You can either buy or sell. Both of them makes you money. So understanding that with structure and our valid highs and valid lows, this helps you mark up the trend. So in this scenario, this will be a valid high. Our last valid low was right here. Now, would you say, Aaron, why is this not a valid low? It's not two or more bullish or bearish candles. They have to be next to each other. So this candle, if this green candle was red, that would be a valid low. So you would mark this as that. Oh shoot, hold on. Actually, no, you just mark this straight through. You would mark this straight through. And I'll show you guys why you would mark it straight through in a minute. Hold on. Why is it not letting me delete this? Nope, let me make it simple. So in this scenario, this is just a straight. This is just straight like this. And I'll show you this because on the higher time frame, this is what it looks like. This is just a range within a range. There are no highs and lows in this area. This is just a liquidity sweep. For people that's advanced, you know what I'm talking about. This ain't structure. This is actually consolidation. There's no clear direction right here. So you wouldn't mark this up as a high or a low, but you would understand that this whole progression was just it was up. This is your last valid low. This is your last valid high. But the chart consolidated in between this point. I'm gonna touch on that because I don't want to lose you guys. Now, we talked about two trends, uptrend, downtrend. Now the third is consolidation. It's not necessarily a trend. It's just a market um, being indecisive. It's not making higher highs or higher lows, and it generally looks like this. Now at this point, when I was getting ready to mark up my highs and my lows, all you have to do is zoom out. If you zoom out, you can understand that in this area, we're not clearly going up or clearly going down. This low wasn't broken, and this high wasn't broken until we pushed up. So if we're analyzing it from this segment, oh, wrong one. From up until this point, let's say that none of this formed yet. So let's say we were just looking at it from here, and you were trying to see, oh, is this a high or is this a low? This is just consolidation. It's not showing anything. You have to provide more context to say, okay, is this a high or a low? Like what's happening here? And then it did perform. Okay, this was just consolidation, which we would call a liquidity sweep. which is one of the confluences. But I don't want to confuse. I don't want to get to that because liquidity can be a little bit difficult to understand. But in any sense, this is a good teaching point because when you see something like this and you can't tell if there's valid highs or valid lows, you change to the higher time frame and it will let you know. You see how I was on the 15-minute and it shows this little mess, and then I click up on the 1 hour and now I can clearly see what was going on. Does everybody see that? Yes, yes. You see how you can mark up structure way cleaner right here? So now I have my low, high, low, high, low, high. Way cleaner than trying to figure out what was going on here. And that is an additional tool that y'all can use when it comes to understanding structure. If you are on a lower time frame, the saying that we say is if it isn't clean, change the screen. So understand that each of these time frames is going to have its own structure. It's all the same thing. Um, and I'll show y'all what I mean by that. So on here, right? If we just mark this up, let me say, okay, we got our low point, high, low, high, low, high. Well, we should be making a high, but it's starting to consolidate a little bit. When we click down on our time frames, we can see, all right, we have structure. Like we're gonna have more highs and more lows, but this and this is all equivalent. These candlesticks, right? The difference between these time frames is literally the increments of time that it takes for each of these candles to form, right? So if we're on a 1 hour, each of these candles represents the hour in the day that that candle was formed, right? So if you look down at the bottom, this red candle that I'm hovering over, that was at 3 p.m. It was at 4 p.m. Market closed between 4 and 6. It opened back up at 6. That's why we don't have a 5 p.m. candle. So we have 6 p.m., 7, 8, right? You click down on the 15-minute. These candles are going to form in 15-minute increments. 4:15, 4:30, 4:45, 6, because again, we don't have time between uh, that 5 o'clock time the market is closed. And then again, opens back up 6, 6:15, 6:30, 6:45, 7, right? So all these time frames just show how long it takes for these candles to form. So you see this timer right here. So I'm on the 3-minute, right? So in 2 minutes or 2 minutes, 30 seconds, right, this candle is going to stop and the next candle is going to start forming. Now, again, when it comes to entering the market, we're entering the market on the smaller time frames because structure is going to form first on your smaller time frame, right? For here, it takes these candles an hour, right? You have to be waiting essentially all day for a setup. And plus, when it comes to understanding risks, you're gonna have to risk more in these trades. And just a simple tool that you can use, right? This one candle is 363 pips. Now, what is pips? Pips is basically like the unit of measurements for this chart, right? So just how we measure currencies by dollars, pennies, etc. The way the unit of measurements on these charts is by pips. Now, whatever you trade, it's going to have a different value amount to what is equivalent to 1 pip, right? So for trading gold on regular gold, 1 pip is worth $10, right? So this one candle is 360 whatever times 10. That one candle is valued at 3,000 600 and wait, yeah, $3,630, right? So Trading on the higher time frames, you're dealing with bigger currency. These smaller time frames is built more for your account sizes, number one, and number two, you're gonna be able to get in and out the market way quicker. Um, and so as you level up, trading is all about scaling. When your account sizes become larger, then you can start trading on higher time frames, and you call that swing trading. The strategy is the same. You could trade it on higher time frames. It's just as beginners, your accounts won't be able to handle swing trades right now. But that is definitely a place that you want to be able to build up to. But yeah, so back to understanding structure, time frames, and the difference between understanding valid highs and valid lows, right? So for here, we go back to our 1 hour, two candle close, that's a valid low, right? Now for here, the only exception to that two candle close rule is if you have a singular long body candle, right? If at this point we can tell that, okay, price pushed up far up to this point, we can consider that a valid high. But when we have something like this, like a small green candle, we're not considering that a valid high. But these long body candles that definitively show, and you can mark this up as structure, you can treat that as a valid high. But in a situation like this where you just see a single small green candle and you can't mark that up as a high, no, that's not considered a valid high. The two or more candle close rule is used more so for your smaller time frames because structure is easier to see on your higher time frames. You can tell, at this point, yeah, we were clearly in an uptrend. We had higher highs, higher lows, right? And then here, if you just scroll up, you can tell at this point we were in a downtrend, right? You clearly see, all right, yeah, we was pushing down. Again, when you click down to these lower time frames, structure gets harder to see because you have a whole bunch more. These candles are forming much more rapidly, right? So consolidation might not be easy to see. Like in this zone right here. Where's my box? Where's my box? Oh, not that. There we go. This area in here, it might have been hard to see on the lower time frame if you were looking for entry because mind you, we're trading on our lower time frames. So you don't want to get caught up in something like this when you could have looked up and seen, okay, nah, this was just a pullback. It was making a new low. This wasn't really consolidating. I just clicked up a time frame to see, okay, this is what's really going on. And so when it comes to marking up structure on your lower time frames, that is where you're going to incorporate that rule of valid highs and valid lows. And when it comes to your higher time frames, that's when you're going to incorporate swing highs and swing lows. Now, with swing highs and swing lows, you understand the major move of the market. So you see how this blue line is showing the overall trend much better. And you do that on a 1 hour. You're just marking up these swing highs and swing lows. When you click down to your lower time frame, you can see these candles following that path, right? But then when you zoom in, you can say, okay, in this period, that's my valid low, that's my valid high, that's my valid low, that's my valid high. Then it was consolidating, right? Created a new low and then pushed up again. Now for this, if we're really looking at this, that's just a sweep and a fair value gap right here. This is just a sweep. But again, we won't cover liquidity sweeps today. It's a little bit confusing. But these swing highs will help you understand what is the major move of the market. Don't get caught up in trying to mark up each and every higher high and higher low. First, when it comes to trading, like structure should be clear, right? The purpose is you're only using structure to get into a trade, right? So this wouldn't necessarily be something that's clean that you would want to take a trade in. There's no point to take a trade in something like this because the opportunity is going to present itself where it's super clean, like it did on this push, right? Structure was super clean at this point. We see, all right, we have valid high, valid low, valid high, valid low, and it's following structure to a T where you can literally just draw it out. Like, yep, we're making lower lows and lower highs. I mean, higher highs and higher lows. And then when we go to our higher time frame, we understand that we're in alignment with our swing highs and swing lows, right? So for this, it's like, okay, this actually was a good entry. I think this happened earlier today. I don't trade during the day, but this was perfect. Like everything was there. Boom, boom. Follow my swing highs, swing lows. Marked up my valid highs, valid lows. Again, we'll get into fib, order block, all that. Right now is just more so understanding market structure. But everything was there. And this coming to the 1 hour first and marking up your highs and your lows will save you a whole lot from over analyzing on these smaller time frames. Because oftentimes when you're on these smaller time frames, one, you're not getting the big picture. Like in real time when you're seeing this, it's like this is probably what your chart looks like. And it's like, this is not what's really going on. Right. I need to zoom out a little bit and see, like, okay, what's really going on. So this is our last low. Well, technically this is our new low. So we had a low, high, low, and now we're breaking below this low, meaning we have permission to go the opposite way, right? So technically this is a break of structure. So that's important because now when I'm coming down to my 5 minute, I'm understanding, okay, this is what's going on. And you see how when I marked it up on the 1 hour, it follows exactly what happened on the 5 minute. Does everybody see that? That makes this much cleaner to analyze. You don't have to go through and be like, oh, what's the valid high, valid low? You did it already. You saw what was you saved yourself all that over analyzation by just coming on your higher time frame, seeing what's going on. Now you're ready to enter into a trade because you know, okay, we broke structure to the downside. I should be looking for sales. And my higher time frame justified this. It cleared this up for me. Now I see what's going on. So yeah, that's always analyze the chart on a higher time frame first. Come to the 1 hour. You can even come to the 4 hour if need be. The 1 hour is probably number one for analyzing the market. If you can't analyze on the 1 hour, don't even look at a chart. Like right here, if you were looking at the 1 hour and it looks like this, it's gonna look like a mess on the like that's what it looks like. Like bad. Ain't nothing good. Nothing good in here. Nothing's clear. No clear direction. Yeah, it looks like we're steady progressing, to the downside. But does this look way more clean than this? You don't want to trade in this. You want to trade in something like this where it's like, okay, we're clearly going down. We're not doing anything right here. This whole thing is a block of consolidation. And this is per government shutdown, holidays. Like this was last week. It was just bad. Last week was bad because we had of course we had a lot going on. Government was shut down. It reopened. We had bank holiday, and then I believe we had something else going on. But the markets was real choppy last week. It doesn't usually move like this. As you can see, we're always getting some type of direction. It was really, really bad last week. But yeah. So again, if there's anything that you take away from today, is come to these higher time frames. Do not do not stress yourself out over all this. You don't have to. Trading is simple. Do not overcomplicate it. I know that the concepts can be a little bit tricky, um, or kind of a lot. It's coming rapid or it's coming at you very, very fast. Um, just break it down simple. First thing that you want to do is understand your trends. Uptrend, downtrend, cool. Once you're able to see that, you're able to see, okay, um, where's my valid highs and my valid lows? Let me just go to the 1 hour first, right? Let me draw my line, then let me click to a smaller time frame, and it'll follow you. You'll see it. It's like, okay, cool. All right, I know where my highs and my lows is, and now I can come and say, okay, has a valid high, valid low. Cool, cool, cool. And you need that when it comes to the next step, which is drawing your fib, which I'm probably not gonna cover that today because again, each one of these concepts, in order to really, really understand it, we got to go in depth, and that's probably another hour or so of explaining the fib, especially if you're new. But market structure is important. That you can never get enough recap on market structure, um, because I still feel like some people um, are not um, under or not utilize the 1 hour, mark up the 1 hour. I as I can tell when people are analyzing on smaller time frames versus analyzing on higher time frames. The higher time frame will make it clear as day to you. It's no point. I know that we're entering a market on the smaller time frames because structure breaks first and structure forms on the lower time frames quicker than your higher time frames, but this simplifies it for you so much. You're avoiding all this over analyzing of like, yo, is this a high? Is this a low? Is this a just come to your higher time frame, specifically the 1 hour, and it will make it so much more easier for you when it comes to understanding market structure. Um, the two candle close rule, um, that is more important for your fib, right? Because uh, the the strategy goes in order. You need structure first, then you need your fib. You need to understand structure so you can draw your fib, and then after that, you need to know um, your fib levels to understand if the order block is in that fib level zone, right? If it's in between the 618 and the 886, and you need to be able to identify order block within that fib. So it literally is in order like that. Like you need to have a good understanding of market structure. Once you do, then you can move on to the fib. Once you do, then you can move on to the order block. Um, and so switching it or trying to understand an order block more than you understand the fib and understand the fib more than you understand structure, you're working backwards. Um, those have to be understood in that order. The rest, like fair value gaps, liquidity, engulfing candles, time-based entry, those four, you can kind of learn them at your own pace and just add it on as you go. But in this order, structure, fib, order block, you have to start with structure. Then you have to go to fib. Then you have to go to order block. If you jump between those three, it'll do more damage than good because it takes a fundamental understanding um, of those things in order for it to work for you. Um, but yeah, let's see. Getting our pullback action. It's not even valid. But yeah, actually, it is 9 o'clock. So that was, let's see. Yeah. Oh, actually, now I'm still going because we didn't really get on till 8:30 for real. Um, all right, cool, cool, cool. So with let's see, cover structure, valid high, valid lows, swing high, swing lows. Higher time frames. I'm trying to think if there's anything else concerning structure. Um, okay, yeah, structure on different time frames. Yep, yep, yep. Oh, when it comes to trading gold, a 15-minute break of structure is a 1 hour retracement. So what does that mean? If structure breaks um on the 1 hour or on the 15-minute, like if we're breaking to the downside or breaking to the upside, it's just it's retracing somewhere on the 1 hour. That is a key thing to note. Um, you can literally have a breaker structure on your 1 minute, 3 minute, and 5 minute, and not have a breaker structure on the 15-minute or the 1 hour. You a another thing when it comes to understanding, like going through the different time frames, you would want those breaking structures to occur simultaneously. So like right now, um, technically speaking, this is the 1 hour, right? This candle, it was starting to be green, but technically this is just retracing. You see how we broke structure on the 15-minute? This is actually exactly what I'm talking about. All right, what do I mean by that? We have a valid high right here, valid low, valid high, then push. I guess you can call this a valid low. We marked it up on a 1 hour, so we can call this a valid low. We pushed up, lower high. Now we're making a lower low. So when this closes below this, we understand that we are bearish. So this is a break of structure on the 15-minute. But if you go to the 1 hour, this is retracing. So technically, we're still in an uptrend. Unless this closes below this low, we've truly broken structure on a 1 hour. But this break of structure on a 15-minute is just a retracement for the 1 hour. You see how this green candle is starting to form, starting to buy up? Now it can either respect this buy or it could reject it. And at that point, if it rejects this buy, we're going to be looking for sales. But this was just honestly a sweep, which, well, let's move that down. Boom. It's actually just a sweep. And now we're getting our reversal. So this actually should buy up. And if you were on the call earlier, this is our target. We want to take this out. I want to take this out so bad tonight. I hope it does. I really hope it does. This right here, we got a bunch of liquidity right here. My bad. I'm gonna kind of. I was trying to cater the call towards the new people, but I want my more experienced people to see this because we was talking about this on the 5 o'clock call. So we're on our 4 hour. We see right here, we got relatively equal highs right here. We click on our 5 minute. Do y'all see this? Boom, 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 boom. Man, the sweeps is crazy. When you see something like this, think of it. We rejected these highs 4 times, right? So you know liquidity comes in the form of triple tops, triple bottoms, um, double tops. Wait, yeah, triple tops, triple bottoms, double tops, double bottoms, right? This is a quadruple top. So when you see something like this, think of it as a battery that's charging, Like think of it as like, okay, like this gets like each time it rejects, it gets stronger and stronger to support a reversal to blow this out the water. And so when I was on the court that 5 o'clock call, the market was closed. So I'm like, tonight I'm really looking for the buys, like the play for the buys. Now, because on this 4 hour, right, this is a valid low. We would have to push down all the way below this low to be in a bearish trend on the 4 hour, right? Cool. On this, we would have to close below this low to be bearish, which we didn't. And this 15-minute, it broke structure, but you understand fundamentally, 15-minute break of structure is just a pullback. When we say retracement, it's just pullback. If you're breaking structure on the 15-minute, it's just pulling back for the 1 hour. And as you can see, what did it react off? 702. The order block's not in the zone. When it comes to entering the market, that's when we need our order block in the zone. But for structure, you don't need an order block to be in the zone per se. But this 702 is highlighted red for a reason. That's just the area that price likes to pull back to. That's just the discounted price like that the banks like to catch. So they like to buy price or sell at this 702. And as you can see, they did. Now we're just seeing, all right, are we going to make this new high? And if we're making this new high on the 1 hour, we will be looking for entries on the 5 minute. So I would need a break of structure to the upside, and that's when I'll be looking for an entry. So we would need to see something like this. This is honestly good enough. So we had to see price push up, boom, pull back. This is where you want to enter. This is perfect. You would want, like, this is what you would want to happen. And this would give you momentum. We got liquidity to the upside to take it out. Hopefully. Oh dang. You're not going. I would have liked to have a fair value gap right here. That would have been a 5 confirmation trade. Being that fair value gap is not right next to our order block. This would be 4 confirmation, which is still good. This actually is an engulfing candle. This is a bullish engulfing candle. So this is indication that we're gonna buy. So like I said, I've been looking. I knew the buys. I really want the buys to take this out. Like this is like flashing lights. Ding ding ding. Come and get me. Come and get me. But seriously, like I really want the buys for this to take this out. It'll go crazy. But that's just again additional information for all the people that's a little bit more experienced. That 15-minute and the 1 hour go hand in hand, and that'll help you find entries for your 5 minute. That's why I don't like entering on the 15-minute. A lot of people have asked me like, why don't you enter on the 15-minute? The 15-minute is for structure, but more so for understanding the pullback for the 1 hour specifically. Yes, you can enter on the 15-minute, but that is more so for higher time frame trumps all more so than coming in for an entry. And so yeah, that I wanted to show you guys that a 15-minute, if it breaks structure on a 15-minute, it's just a retracement for the 1 hour. So the move, don't get pump faked by this move, by this sell. This is the move that you want. You want to buy. So that'll help you on the 15-minute. Where? Oh man, looks like it started to reject it, pushed up. I do not want the sales, bro. If it gives it sales, I'll take it, but I do not want the sales, bro. The bias is just we have a good target to take out, but it's been rejecting it. It has not been taking these highs. But man, just need the opportunity to do this. Is just a sweep. Hmm. I don't see it pushing all the way down, closing below this. So we'll see. I'll keep watching it for entries. Of course, I'll call it out, but the buys is what I want. Um, but yeah, um, I guess that'll wrap up um today's call. I know if you're new, that was a lot of information. The boot camps will definitely walk through each topic slower. Um, especially when it comes to understanding market structure. It's just key takeaways. Three things that you need to understand with structure: the trends, break of structure, valid highs, valid lows. Swing highs. I like to add that in after you at least learn those first three. But then, of course, you're going to incorporate swing highs and swing lows. They kind of hand in hand with understanding valid structure. But those are the three main takeaways when it comes to market structure. It can sound like a lot, but when you break it down, it's like, okay, it's really three things that I need to learn about structure. It makes it a little bit easier. Um, and then also, guys, rewatching the videos is crucial. Um, the hmm, the language of trading is different. Like it's new. Um, kind of having it on repeat. Of course, like yeah, we're gonna have the classes, etc. But having that or constantly playing the videos over and over and over again is gonna help you tremendously. Um, there is there is a level of work ethic that comes with who is gonna succeed in trading, and that is clear as day. Um, the people that come in and was this recorded? Yeah, this was recorded. Um, the people that come in and understand work ethic and watch the videos over and over and over again, um, utilizing all their resources, it's very clear. Like it's very very clear. And mind you, we see it. That's one of the things about that's great about having a platform. We can see who watches the videos. We can see who doesn't. So the ones that may not have the progress or may not want to have the results that they want, like we can see it. Like I can see why. It's like like congrats to Mel, but Mel reminds me of my very first mentee, Selena. Like Selena came in, same thing, 3 weeks, knocked it out the park, withdrew a crazy bag, which was a huge blessing for her family. She was able to extend her vacation. Her story always like it it it's very I don't know. It's like it's overwhelming to being able to help somebody, especially in this situation that she was in. But I would tell you, like Selena wanted it. Like I didn't have to check up on her and this, that, and the third. And same thing with Mel. When Mel takes advantage of every single opportunity that she has. Mel was on a 5 p.m. call. She's on the 8 p.m. call too. Like it's those type of things, and it's like that's a credit to her success. And I just encourage people. Um, we had another I had another mentee. Her name is Danielle. Y'all probably seen her. Y'all probably haven't. The first month she was with us, she joined back in July. She would never join the call ever, and we laugh about this now because the first month never joined the call, never did anything, and then um like literally like the next month she locked in. I mean, when I tell you she locked because she saw like other people like actually work like it was actually working out for them, and she was like, yeah, no, I'm gonna stop playing. And same for her, like that month, that second month she came and locked in, passed her count, got a withdrawal. Like literally it may seem hard or confusing or new, but you gotta attack it. Like you gotta attack it. The resources is here, the help is here. I don't mind getting on calls. Like it's people in the chat that can tell you they text my phone. I respond to them. I might not respond right away. I respond to them. We get on the call, anything like that. I'm very, very helpful. I'm willing to help, but you got to match the effort. And I'm telling you, the what it takes is what are you doing when we're not on the call? It's the characters and it's the integrity. I understand a busy schedule. Actually the reason why I traded at night in the first place is because that's the only time I could. That's the only time my schedule allowed me to do so. And so with that allowed me to stay up at night, be on the charts, to do this, do that. And so now I'm at a place where it's like, I know how to trade because I literally studied this in a certain availability time that I had, to be on the charts. And so I understand that completely. Like if you have a busy schedule and all that, whatever increment of time that you do have for it, I advise you to definitely take advantage of it. This is something that is, I mean, it can be extremely lucrative for you. Um, but yeah, definitely if you feel like that you're slacking or you haven't been on it, yo, get on it, bro. You gotta get on it because um it's there. The success is there, the results is there. Being like and also being like me, like I my the purpose honestly is to be duplicatable. Like everything I'm doing, one day y'all will be doing. And don't think like it's like, oh, it's gonna take me a while. Everything I'm saying, it sounds new, but it's not complicated. You just have to repeat it. Everything we're doing the same thing over and over again. When I'm coming to the chart, I'm looking for five things: structure, fib. Well, once I see structure, draw my fib, seeing order blocks, understand liquidity, fair value gaps. I'm doing it over and over again. And it's just the simple fact of doing it over and over and over again until it starts clicking. I like to say that trading is full of aha moments. It's full of like, oh shoot, like that's what that means. Like it's countless times Jayla will tell you, like we're randomly doing something during the day, and I'm like, yo, babe, like this is what it was. I'm like, babe, write this down, write this down. Boom, I start writing stuff down. Like I'm like, yo, this makes so much sense. Come back to the chart, man, and it's just like it just clicks. Um, and so I mean, again, that's what it takes. I'm not gonna harp too much on that. But yeah, uh, that's pretty much it. On that. Does anybody have any questions, comments, concerns, anything that they would like to share? Anything they felt confused about? Yes, no, yes. Thank you. No, for sure, for sure. To my new people, I hope that you aren't overwhelmed. It can be overwhelming the first day. Uh, Trust me, I get it. But again, um, the bootcamp videos will definitely break everything I said down way, way more simpler and easier. And then there's an additional bootcamp for dummies that will break that down even slower. So again, you have resources and tools, and then on top of that, you can ask questions. It's not like you'll be stranded and I got to figure this out myself. No, that's the point for community. That's the point. That's the reason why we're here. Um, but yeah, hopefully you guys enjoyed it and are not intimidated by it. It's nothing to be intimidated by. It's just new. It's not hard. It's just new. Um, but yeah, anybody anything? Um, sorry, can we learn however? Oh no, you're good. All that stuff, the leaving and joining, like I already know. I already know, especially from people coming on this a new platform. I don't expect nothing from anybody that's new. I don't expect you to know anything, nothing. I'm here to teach you from the jump to when you start winning. And if that comes with navigating the platform, like I get it. It took us a while to learn this when we first got on it. It's actually truly a blessing that it does have as much as it does. But yeah, no, I get it for sure. You're good. You're good. Ooh, man. Alrighty. But yeah, if anybody I guess last call. Anybody got questions or anything? Everybody's hearts, minds open and clear. Going once, going twice. Word. All right, bet. You all know the deal. If I see anything, it's gonna be called out. Of course, I'm gonna be watching it. But yeah, if everybody's good, you guys have a great rest of your night. And I was with, wait, what's today? Today Thursday or Tuesday? No, it's Tuesday. Okay, cool. Yeah. You guys have a great rest of y'all night. I'll see you guys on Thursday.